Now, while the deal has eased tensions and calmed markets, key questions remain about what comes next. Well, joining us now in the studio is Cornelia Meyer, Chief Economist at LBV Asset Management. Cornelia, it's great to see you. We've spoken a number of times. It's the first time we've had you in the studio, so we're very honoured. A very difficult period this, isn't it, for markets, energy markets in particular. Beyond the politics, is this ultimately an economic agreement, you think, designed to stabilise markets, keep things calm and prevent any further economic shocks?
Well, thank you for your hospitality in your beautiful studio, first of all. It is economically incredibly important because what the closure of the Strait of Hormuz did to markets, you saw, I mean, they were seesawing with every statement, yes, positive or negative. It was also with oil markets because, you know, you had 20% of oil and oil products come through the Strait of Hormuz. 20% of LNG comes through the Strait of Hormuz. More importantly, 30% of nitrogen-based fertilizer comes through, yes, the Strait of Hormuz. So this is really very, very important. It's important for the whole world. It's especially important for the developing world, who just gets priced out of the market with the rich Europeans and East Asians competing for LNG cargoes from America, with only that much fertilizer to go around, and the planting season in the global south to be imminent. So it came sort of at the last possible moment, because also we've survived. The reason oil prices didn't go up more is we survived on living off inventories. Yes. And they will, people say, or experts say, by about August there would be a tank button, so there's no more crude to go around. So it doesn't come once. This agreement, if it holds, doesn't come 1 second too early.
And for Iran, of course, the oil will now flow, assets will be unfrozen. I mean, do you think this could be transformational for the Iranian economy? Well,
inshallah, it will happen like this, because we still need to see how it really all will end up. There's not just Iran and the US in this equation. There's another country in the equation. They will need to play ball as well. But I would say, yes, it would be very important, because look, Iran has had crippling sanctions. Since 79, there have been sanctions of one sort or another. And this would be very, very important for the country. And always when you have sanctions, it is the average man in the street who suffers the most.
Indeed. And in terms of markets, everybody has been sort of transfixed on trying to figure out, will oil prices drop? Will market turbulence die down? What are you expecting to see from markets? A cautious positivity, perhaps?
Well, markets will always, especially oil markets are driven by greed and fear. And they buy on the rumor and they sell on the fact. So that's the things that happen with markets, right? So what I expect is, right now we see oil prices drop. They will drop some further, but at some stage reality will kick in, because all the ships are in the wrong place. So, and for a ship to go from the Strait of Hormuz, let's say, to Japan, that takes more than a month. So it will take time for things to sort out. We also had to, shut in quite a few oil fields, because they all had nowhere to go and storage was full. So one can take oil from storage, but restarting those oil fields will take time. It's not a light switch. We also don't know just how much damage has been done to the fields during the course of the war. We know that 17% of Qatari LNG production has been taken off, and that will take 2 to 3 years to restore. But we don't really know, so I wouldn't hold my breath for them to go too low. And let's not forget, we've taken all the oil out of the strategic petroleum reserves, other national and private inventories. They need to be refilled. So there's going to be an enormous demand for oil for the next few months.
And we don't know, as you rightly say, all of the ramifications, all of the details even at this stage. We have heard, though, about the reportedly the $300 billion reconstruction and recovery fund. I mean, if this does materialise, this could be one of the most significant economic injections that Iran has had, for decades, couldn't it?
Since the Shah left, essentially. And this would be transformational for Iran. And I believe when you want to have peace, I believe in the carrot more than I believe in the stick. So I think that's probably going to be a nice carrot if it works. And there's also the Iranian assets that have been frozen. So it could be a way forward also for other conflicts if this works out. And it's a big if still. If it works out, it could be a good template for what one can do to end the conflict and get a warring party on one side.
Because there was so much negativity, Cornelia, wasn't there? There has been during the conflict, predictions of, the Gulf states will never go back to being what they once were. That doesn't look to be the case. There looks to be more resilience there than perhaps some economists initially anticipated.
I never said that. And do not underestimate the Gulf states. They have created a phenomenal business model as an island of stability in a sea of conflict. It's not just Iran. We have Sudan, we have Somalia, Somaliland, Libya. We have all sorts. Yemen. We have all sorts of conflicts. So kudos to them, and especially kudos to the Kingdom of Saudi Arabia, who has, with its east to west pipeline during the Iran-Iraq war, said, we don't quite trust this, so maybe Hormuz will close at some stage, and built a pipeline. And we're able pretty quickly to up it to 7 million barrels a day going through it. And that's wisdom. And you can only do that with a national oil company. Because if you were an Exxon or a stock market quoted company and you had a big asset like a pipeline from the east to the country to the west of the country sitting producing nothing for 40 years, shareholders wouldn't let you do that.
Indeed. Cornelia, it's always great to hear analysis, even better to have it here in the studio. We thank you very much indeed for joining us.
Thank you so much for having me.